Hello, this is Brian Shannon from AlphaTrends.net. It is Thursday, the 31st of January, 2008. The market's closed, and we had an up day today. We had quite a volatile day, actually. The market gapped lower, and then pretty much buyers were in control all day here. If you look at the 1-minute time frame here with the daily VWAP, that's that dotted black line. What we saw was the market gapped lower, and then buyers took control and pretty much, again, kept control of the market all day long. With a little bit of profit taken here late in the day as the market came right back down towards that 137 level we've been watching. That, of course, is the lows from August of last year when this subprime mess first hit. But bullishly, it did close above that level for the first time since we broke down below that level actually about 2 weeks ago. So that's a good thing to see that the market's back above there. And it looks like I'm getting some bad information on my daily chart. So let's take a look at the 30-minute time frame. You can see here that this volatility yesterday, it looked like the market was going to break past that 137 area when the Federal Reserve announced the latest discount rate cut. But late day selling pushed it back down. We did have a advancing 5-day moving average, and I said the more important level of support was going to be 132. However, the market dropped and then recovered very nicely here, closing again right near the highs and coming up to yesterday's levels as well. So this area that we saw from Thursday or Wednesday and then tested again today at, let's take a look and see what that number is. Today's high was 138.54, 138.54 yesterday as well. So 138.55 or so, if the market can stay above there for a period of time, then perhaps we're going to get a little bit further bounce. The market, you can see, is right around that 20-day moving average, and getting back above and holding above that 137 level for more than a couple days might put us in for a test of the 143, 144 level, where we're seeing the location of the declining 50-day moving average. It does remain a very volatile market, obviously, and things change very quickly. We basically had a reversal of a reversal today, and the buying was pretty aggressive. You can see that the volume was bigger than yesterday, or I'm sorry, a little bit less than yesterday, but bigger than what it has been lately. So it seems as though maybe we're getting a shift in the supply-demand in here. And if we look now at the VWAP since the Federal Reserve began this latest round of cuts, that is a week and a half ago, last Monday, the market opened down here. And what we'll do is draw a line straight across. And what you see is where the market actually found support was at that VWAP. So it appears as though the buyers are saying we'll buy it as long as it's above the average price since the Federal Reserve cut rate. So that level seems to be being defended here as it touched exactly on that level today, and that's where it found support. Now looking at the 30-minute time frame, and again, well, that's the VWAP for the year. Actually, let's take a look at that again, because you can see now that the market is actually above the average price for the year, which could be viewed as a positive as well, even though we're down significantly. This is the trend line we've been looking at as well, and things are starting to shape up a little bit. I think you want to keep an eye on this morning's lows at about 133. And then 132 just below that as far as key levels of support going forward here the next few sessions. Semiconductors, again, they need to just get above this 365 level before you can have any faith in any upside. The market just seems to be chopping back and forth in here. Nothing's really changed in there. It's been down for a while. The fact that it hasn't broken down further is encouraging. And again, above 365, we have the chance of a potential short squeeze. How long that squeeze may last is anyone's guess. The Russell 2000, if we take a look also here at the VWAP, since it's been, that's not what I meant to do, those are some Gann lines. The Fibonacci, the VWAP though for the IWM, since the rate cut, you see the market did dip below that level. However, it also held above the support at 37.50 that we thought was going to be more important. I did say also that the $69 level was going to be important, but the market broke below that $69 level on a gap, but didn't really spend much time below it. You can see that once the market recaptured that $69 level, it actually did provide support in there, and that's where the next round of buying began. And we saw just a real nice stair-step pattern in here, higher highs and higher lows, and you saw volume increasing on the rallies, followed by diminished volume on the pullbacks, and increasing volume on the rallies, diminishing volume, increasing volume. That's the type of pattern that you want to see in a market that's thrusting higher and then pauses and pulls back slightly to correct those short-term moves. So this Russell 2000 does act a little bit better overall. However, again, we've got to keep an eye on the potential for a larger source of supply being released to the market up near this $73 level. It had been important support for quite a while. Support once broken tends to act as resistance, so you also see that that's where we're going to probably see the 50-day moving average meet up with this market as well. So that could be another reason to expect that there might be some selling pressure in there. But looking at the 10-minute time frame, we've got this rising 5-day moving average. And again, you can't just buy and hold in here. Obviously, it's just really a whippy environment, and you've got to have if you're trying to invest, you have to have wide stops. So your share size should be smaller. Or I think that it continues to be more of a day trader's environment more than anything. So. I was kind of looking at this market thinking it's going to take 3 or 4 days to heal after the apparent breakout here. And again, you can't get locked into a belief about what the market's going to do, especially for these short-term moves, because it's been so volatile in here. And volatility in bear markets is typically much higher than that in a bull market, because the emotions are so much stronger of the participants when we have an overall bearish environment. The NASDAQ 100 is holding now above today, above the declining 10-day moving average, and also above the August low. So that's good to see a little bit more buying pressure in the NASDAQ. We saw, this group has been the laggard actually, and we've got potential for more resistance up near 46, 46 and a half. It is still in a downtrend. Keep an eye on maybe that declining 20-day moving average. We've seen the 10 act as resistance. Now that 20 may act as resistance. This may get a lot of people's attention as well. The fact that the 50-day moving average is now dropping down below the 200-day moving average. To me, that's a signal that a lot of people look at that is probably a little bit too late. But that is that it comes after a significant move has been made a lot of times. The volume was nicely up in the Qs today as they finished again with a 1.71% gain, and that the opening lows were basically the lows of the session. The market did hold above that 43.55 level that we were looking at as potential support, and this 5-day moving average is starting to advance a little bit in here. So this picture is getting a little bit more bullish on the shorter term time frames, but again, look at these daily picture and the weekly time frame. There's still a big mess. The weekly time frame, it looks like perhaps it could bounce even all the way up to 49 or so. But let's take it a couple. Just take it by looking at the shorter term time frames to get our direction from. When you get locked into an overall belief on the longer term time frame, then you'll find yourself accumulating large losses as the market moves against what you're expecting to occur. So a lot of people look at this video in places other than my blog, so take a look at alphatrends.net. That's where I have other analysis throughout the day.